Okay, so let's begin. So today's topic is simply the 5 symptoms to be a consistent profitable trader and how to make money consistently trading the market. So if you're here to maintain more consistency or knowing how to be more consistent, then I'm more than happy to give you guys solid information. If you have any questions, email me or give me a call. There's no volume. Okay, let's see. Okay. But can you hear me though, John? How you doing, John? Can you hear me? So my email address gmail.com or my personal email address is supertrader72@gmail.com. You can also give me a call +1 650 390 7104. So we are based here in Santa Clara, in California, next to NVIDIA. Yeah, basically, to be close, we're in between San Francisco and San Jose. If you ever get to the California area, please make sure to come and visit us, and you can have a look in terms of our classroom setting style. John says he can't hear me. Anybody else who cannot hear me? According to my mic, everything is all set to go. Anyone else that can't hear me? Jerome, can you hear me? Keith, Ken, can you hear me? Type in your chat box for me, Ken, if you can. Greatly appreciate if you guys can answer and participate, since today is actually for you, and see if in terms of information I can give you. If you have any questions on how to be more consistent, please feel free, ask me. Better to better to either ask me personally via mic or through the chat box. Okay, the chat box is underneath actually. There's a few that you can choose. There's chat box. There's also, you can share your screen if you want to share something. Then pretty cool. All right, so but you can hear me, right? Sound good. Okay, awesome. Very nice. Okay, so let's go through here. What's the agenda? There's an introductory, more about us as well, so you know who we are, why traders lose money, and then give you simple steps on how to improve your trading results to be more consistent. Yeah, that's what you're looking for. And then a question and answer, we'll do Q&A if you have any questions basically afterwards. So my goal is to be in between 1.5 hours, depending on your questions and depending on how we go for today. Okay, so we are basically based in the Silicon Valley, like I told you. So we focus on the learning process to be a consistent, profitable trader. It is more about the consistency that we are dealing with through 3 stages of learning, which I'll show you. And also we focus on world-class athlete training technique based on the be do have trading principle. So also we focus on the quality and not the quantity and the amount of people that we teach. We're totally different. We just don't sell a system. We focus on basically everything, mentally, technically, and body conditioning, physically. So we focus on the disciplinary aspect, the integrity and the excellence of just the education, but the whole process in order to make money consistently. So from there, we've been basically getting awards 3 or 4 years basically in a row based on what we do. So there are 3 phases of the training program. In my own opinion, to be in a trading zone, there has to be a mental conditioning aspect. So we do a lot of visualization, meditation, trading psychology 101 and 102 to focus more about our belief system, whatever limitations that you may have that could impede your success when it comes to trading. Body conditioning, of course, is an important element, whether if you are eating correctly or you are resting correctly or sleeping right. And technical conditioning, which plays a big role when it comes to the education, is because traders basically learn how to trade the wrong way, and simply they created already a lot of bad habits based on what they know and also based on what they learn. So these are mainly the major effects on what causes traders actually to be inconsistent, is because they are not balanced in these three phases. So, however, on the other hand, by looking at that after 2 decades, 20 years of actually trading, and also almost 20 years of observing traders, the big effect is actually from the mental conditioning and focusing also on the technical conditioning, where, like I said, the skill set is below par, whether we like it or not. Also, they're not focused about also in terms of body conditioning components. So I'll go through a little bit more in detail once we get through more on the actual process of what I'll be teaching you, showing you today. So about myself, wrote a book based in 2012. I'm currently writing another book, mainly more about the differences between a retail trading system compared to a institutional type of trading system. Institutional trader, every year, basically, as far as much as possible, they always network with floor traders, and they have a different set of mindset, not just the mindset aspect, but also the way of trading. They don't look at charts. They look at the overall trend. They look at the trend. However, once you're on the trading floor, they don't look at charts. They basically look at who's buying, who's selling, who's the other person on the other end. So everything's got them to do with supply and demand and price. So based on my experience as an elite athlete, I'm still an athlete at this point in time. I just came back from the World Championships in Brazilian Jiu-Jitsu, and I did pretty good. I basically made a mistake in the quarterfinals, but I was almost there. But nevertheless, from the whole process of being an athlete for the past 20 years to 25 to almost 30 years, is simply I bring that experience into my education and the way how I coach and the way I teach my clients. In my opinion, to be a trader, you have to have that mental attitude to be an elite. Basically, you need to see yourself as a champion before even you trade. So in other words, you always need to be in a peak performance state when you're trading, especially through day trading. And so my purpose in here today is I'm not here to sell you anything. I love to give free pieces of information, to give facts, not myths, and give you the awareness that, and also the pitfalls basically trading. There is no easy way out, unfortunately, when it comes to success in terms of trading. You need time and you need money. On the other hand, depending on what you use, if you're using stocks as a vehicle for trading and you are new to the trading game, even you're a novice or intermediate, and you don't have enough skill set or the knowledge or the resource, you will lose that money. That I can personally guarantee, especially if you're doing it by yourself. I'm not here to scare you. I'm just giving you basically the facts on what's happening. I'm doing this now basically for a long time, that I'm actually educational. The education industry is a very small industry. Everybody knows each other. And unfortunately, at the end of the day, it's all about making money in terms of selling a system. So some cases don't really care about the student anyway. They know that there's no perfect system, and they know they will keep coming back. It's all about marketing. So I, on the other hand, I'm a totally different type, that I'm here to assist and help people in order to make money consistently. However, it takes time. And a lot of people want to make money very, very quickly. That is not major focus. Olympics just basically finished. Imagine an amateur or novice basically athlete want to go to the Olympics. Forget it. They need to qualify in order to represent a country. So there's a certain process. Trading is basically the same. In my opinion, it's like sport. There's no easy way out. You need to put the time and effort and the desire and the passion in order to really make money consistently trading the markets. And that's why I'm here today, is to give you, to inspire you, and maybe perhaps, and to give you more ideas. And maybe perhaps trading is not really for you. That if you're going to keep on doing this, you want to be a professional trader, then to be honest, you need to do work. You need someone. You need a coach. You can't just do it by yourself. You will lose. And when I tell this to people, automatically people start to leave. And that's fine by me. Because I know for a fact that if they keep on doing what they're doing, in order for results to change, at the end of the day, you need to, it comes from within in terms of the change. See, look at that. All of a sudden, one person already left. And that's the way it is. So I would rather have one person in the room that would listen and to have a change of idea rather than someone who's not listening. So at the end of the day, it is still within you. It's within out of my control. I can control what I can control, but you can control what you can control. As a coach, on the other hand, my job is to assist traders to guide them to be where they want to be, like an athlete, very, very similar. Okay, so, and also my purpose is actually to reduce the 75 to 95% of retail traders that lose money basically from trading. And these are real numbers, they're not myths. Okay, part of just to show you in terms of results, it's simply, I'm not here to brag or anything like that, but to give you two cases, that one for a small amount account and one for a little bit bigger account. Of course, it's really no point as well showing more of a bigger account. That's something just to notify, to tell you that for this 1 year trading result, actually more than 1 year. So if we go from the very top, 2015. Okay, you can see from there, October 2015, all the way to just got a starting point of May 2015. Just to give you basically a trail. And those are rollovers, commissions. And basically in the end, here currently profit loss time is 70,460 in total, but currently at this point in time was a floating profit loss of 5,500, 118,398, starting from 47, say 50. So to have more than 100%, everything, basically it is possible. It is possible to make money basically from trading. It's possible to beat the markets. On the other hand, it's time. Like for me to get to where I'm at, it took me simply, I don't know, almost a decade through experimentation and also a lot of education, networking for traders on the trading floor, learning from professional traders. Because when I learned how to trade, I learned how to trade in Australia. I started trading in 1996 through the basics of papers and going through my own thing. And then there should be a better way for me to make money by getting as well where institutions are getting, or when they're buying, I need to know where they're buying. That was my job. So when it came to the US, networked more, got more into the trading floor, and basically observed what they were doing. And there's a certain process. Their mentality, just imagine alpha, there's like hundreds of alpha males and alpha females in one set. And they don't think. They just basically, they're so hungry that they will fight for the price. In trading, after planning and preparation, it should be the same way. There's no level of thinking. You have to react. But the thing is, the planning and preparation prior to trading should be impeccable. You need to double checking, triple checking. You need to have a really good systemized trading checklist from top to bottom, not just from a trading perspective in terms of system, but through the mental side, all the way down your process technically. And I will share more of the process of how I do things. And the other one, on a smaller scale, in terms of to show students that it is, and that's the thing, I use Forex as a vehicle for trading, for teaching. At the end of the day, it's the principle that if you know how to read price, you know how to read a chart properly. Reading a chart is a two-dimensional aspect. But you don't see the third dimension of who is actually trading behind it. And that is one of the toughest things to do. And hence is why retail traders trade based on subjectivity, based on what they think of what it will do, rather than looking at the markets the way they are, based on what the market is actually dictating. I apologize for the noise in the background. They're actually just cleaning as part of the business complex. Okay, so from here, I always tell students to start from a $500 account and then raise it from there to maintain basic consistency. So the results on the over here is everything we do. Right? We have live trading classes. Whatever we do find, we enter based on what we do find. We enter based as a group. It's a group component. It's a team environment. It's a camaraderie. Results, of course, will change despite everybody will be doing the same trades. And the reason is the results will vary is because some will no longer follow the plan based on a belief system. Someone who is more anxious will micromanage their account compared to someone who's calm, someone who's more focused. So that's why, results, in my opinion, a methodology is a methodology. You can have the most perfect system, perfect methodology. However, if you are not right mentally, you will not make it, unfortunately. It's almost like a guessing game. You're just basically gambling. Trading is a profession. As a trader, you need to see yourself as a professional gambler. You need to learn how to control your emotion. You need to learn how to dictate, basically, in terms of objectivity, looking at the markets more objectively. Okay, so those are simply just some results. And like I said, I'm not here to brag. I'm just basically here to show you that it is possible to make money trading the marketplace. And I've seen, actually, I know for a fact there are a lot of good traders out there. I know a few guys who make 300 minimum on average, 300% a year. But these guys are also, the way how they do things, the way how we trade is actually, people who make a lot of money they're very simple traders. They're not subjective. They look at the markets the way they are, and very good risk management and money management. We know that if we know that we are wrong, we don't use our ego. We close our positions very, very quickly, and then we accept it, hence the keyword acceptance, and we take full responsibility of our own actions. We are very open-minded when it comes to learning because there's a plethora of a learning environment. When it comes to trading, there's an infinite piece of information. We are not like institutions like Goldman Sachs where they have everything. I mean, if you really think about it, there's the amount of employees that they do have and the amount of resource they do have. So what causes traders to lose money? Why do they lose money? Well, the number one reason why they don't make money consistently is because they have no trading plan. They have lack of knowledge, lack of skill, lack of trading experience, and there's no mentoring, no coaching. They want to do it by themselves, unfortunately. And through there, you only see 180 degrees that's in front of you. You don't see 180 degrees that's behind you. They don't know whether they're doing the right technique. They don't know whether what they're using is right for them. So this synchronicity between their personal behavior, personal profile is not in sync with the system that basically what they're using. Which causes a big issue, a big problem. They focus on the outer game of trading. The outer game of trading is simply more about the technical aspect. To be honest with you, it has got nothing to do about technical analysis. It's got nothing to do about the trading system. What you need to focus on is the inner game of trading. You really want to be consistent. What causes you to self-sabotage your success? What causes you to pick the losing trades? You choose the losing trades, or we choose the losing trades, whether we like it or not. Even before you execute, if you know that you are not confident, you will lose money. Okay? So traders who trade for fun, they look at it as mainly as a hobby to supplement whatever is missing in their lives. Lack of preparation, they see trading as a hobby, and they trade the market to beat the market. You cannot beat the market. And I will show you here too, in terms of an article written by Ray Dalio, actually the top heavy hedge fund manager who has more than 1.5 or 1.6 billion dollars in terms of asset management. Or 100, no, I beg your pardon, 150 billion dollars actually. They want to be right, no support system. So to learn how to trade is like going to a buffet. It can be very confusing. That's why a lot of people, can be overwhelming. Why? Because there are a lot of different asset classes, from forex down to what we call contract for difference outside of the US. And then you have technical analysis, you have fundamental analysis, you have outward theories, gun theories, different type of methodologies. And you have different type of price patterns from head and shoulders, the double tops, double bottoms, Fibonacci, support and resistance, then you have your emotions. So there's a lot in order for a person to do things, and hence seeing and being in the education industry, I see a lot, especially in my olden days, when they don't make money in the stocks, they go to options. They go to options, they go to forex, and all of a sudden they go to futures. And all of a sudden they quit because they say that it's not really for them. And at the end of the day, it's got nothing to do about the vehicle. One is because they just don't know what they don't know. Two, it is also the mental game. So it is imperative to have a clear picture of what you really want as a trader. In my opinion, there is 5 simple steps to improve your trading results. Now, there are 3 phases when it comes to trading. There's before trading, during trading, and after trading. Before trading is your planning and preparation, your intention. And I'll go through that more in detail. During trading, once you executed the trade, that is it. You have nothing else to do. All you got to do is to use the right side of the brain, which is now your intuitive side, and can you control your own emotions? If you can do that, and you can follow the plan, you can have what we call your being to the core level of discipline, patience, then you will be able to make it. Meaning that the end result is the end result. Also responsibility, by the way. The after effect, either you make money or you lose money. Normally, the after effect of losing money comes from the lack of something before trading or the during part. And hence, a lot of traders will have a lot of regret. They will dwell upon the shoulds, the coulds, the woulds. If only I did this, did that, then I would make money. Everything in hindsight looks good. So when we're trading, here's a chart. A chart is a chart. People always say, oh, what chart is that? Doesn't really matter whether this be a euro against the US dollar, this is Apple, this is the S&P 500, this is oil, this is gold. A chart is a chart. What's important is simply, can you read the chart the way it is? Here is what causes different results. It's the future, the unknown. Trading is like playing cards. The only difference is that you have infinite cards in a deck. You have what causes the uncertainty is the outer factors that we don't have full control as a retail trader. In other words, things like news, whether Yellen will say something, the president will say something, GDP, whether if Draghi will talk, whether there's going to be some form of a tsunami or an earthquake, another terrorist attack. Anything can happen over here. And what causes fear for traders is simply the fear of the unknown. They don't know. And why? Because everybody wants certainty. They want a certain outcome of where it's going to be. Luckily, in trading, you only have 3 different directions. You will go to the upside, go sideways, or go down. That's it. So when you really think about it, you already have a 33% success rate at the very beginning before you execute, or even before you analyze. Meaning that if you can just choose which one's which, will it go up, down, or sideways, then you have a 33% probability of winning already. All you have to do is to find a 60% deficit to create a 100% probability of winning. And then from there is to create the probability where will the price, if you're saying 100% probability, you create a probability will go up, then the probability it will drop is highly unlikely. So as part of that, then you can also now create your own risk management. Okay, great. If it is going to the direction of where I want it to be, and it's creating a probability, then I can now choose the amount of position size that I'm willing to risk based on my own capital. Everything has got to do with numbers. Numbers don't lie. If you are good in numbers, you're good in mathematics, you're good in statistics, that will create a probability, you have very good intuition when it comes to create your own probability, that's great. That's why we do it in a group environment at times, is to create a real objective probability, a real number Because to create a probability that is objective is you need a minimum of 2 people. That's how marketing gets created. You know, you create a marketing plan, or when you're marketing a product. And the only way you will know whether that product is good is through giving out a survey. So simply as well in trading, you are in a group environment, you create a survey. What is the probability that it will go up based on what everybody sees? Now, if everybody sees, say for example, everybody sees that it's going to go up, but one person says it will drop, then that's no longer objective. Then it's subjective because one person says it's going to drop. So then you need to reanalyze again the whole lot, and you need to know whether why did that person really see it as being bearish compared to the rest of the majority saying it's bullish. So that's how you create a proper objective way of doing things. Now, if you're doing it on your own, it's a bit of a challenge because you're not using your own opinion. And imagine if you're not aware of your own self, then it becomes more challenging once again. So in most cases, research shows that 95% are on a sleep state, meaning despite we are awake, but deep down inside, we're actually asleep because we're not aware of certain things. Only 5% of the whole population are basically awake, people who are very aware of their things. When it comes to trading, you need to be aware of what you're doing, basically. Okay, so that's basically the whole process. And why people lose money more often than win is because of the uncertainty of events that's in the base of what's happening in the future. For me, that's why I love to teach when the markets are live, and that's why I use Forex as a vehicle because of its advantages. It's open 24 hours, 5 days a week, and I like to teach when it's open. I want to prove that the methodology basically works. Excuse me. So in most cases, when you are in a seminar setting in the weekend, it's so easy to say, hey, I bought it over here, I sold it over there, I made 300%, I made this, I made that. In most cases anyway, they hire good presenters and they're not even traders. So, and then in trading stocks, I mean, if you're learning how to trade stocks and the market is closed, it's a little bit more challenging, right? You need to see the effect of what it can do when the market is live. So to teach something when it's live is more challenging than when it's closed. That's why our methodology, my philosophy in teaching is very similar to martial arts, is that when in martial arts, I mean, you can learn how to punch, how to kick, but the bag doesn't hit back, the board doesn't hit back. The only time it's going to work is when you're sparring with another person who also has 2 arms, 2 legs, and that can move. How can you prove then that whether the technique, the strategy, offensively, defensively, works or not? The only time it will work is when you're sparring. That's why in our classes, live trading is an important element, and that when it comes to teaching, it's also live because the students need to prove and they need to present in front of everybody as well, whether if they're analyzing the markets correctly or not, to be objective as much as they can. So that is simply the process, okay? Any questions? So those are 3 phases of trade. Nothing? Awesome. So step number 1, to be a consistent trader, before trading, you need to know your intention. You need to know your intention why you are trading. Why do you really want to trade before you even plan a trade? You want to trade because you want to make money. That is the major answer. You don't trade to check out a system, to do this, to do that. No. Sorry for my language, that's all basically BS. Then you're trading now for the wrong reasons. We trade, and there's only have one purpose and one reason why we trade, is to make money, nothing else. Trading is a business, it's not a hobby. You want a hobby? Do something else. You want to make money? Then think of it as a business. To be in a business state where you have your own business, you need to be really serious about it. So no dilly-dallying, no procrastinating, no nothing this, no doing that, no reading news or texting, using Facebook. No. You have a certain time, you say to yourself, okay, I have 1 hour to focus, I have this time to look at potential trades and top to bottom, and I need to be very disciplined, to be meticulous for 45 to 1 hour. That's it. And then from there, it is really important for you to know the trading game. Who are you really dealing with? If you are a retail trader and you trade like a retail trader, you will lose. Why? Because you are a retail trader. A retail trader is simply someone who is very subjective and look at things and the things based on what they believe in, you will lose. You really want to make money in the markets, you need to step outside and be an observer. Meaning, as an observer, you are looking for facts, you're looking for statistics that will give you the evidence of why you need to enter, that will create the probability of winning. If you think that way, your consistency will increase massively. That I do guarantee. Plus, good money management, good risk management, good profit maximizing strategy. Like I said here, don't trade because of it, looking at it as a hobby. You want a hobby, like I said, do something else. Go to the casino, even better. But don't use trading as a hobby to supplement whatever it's missing in your life. Meaning that if you're working full-time and you're bored of your job, then don't look at trading. Do something else. Find something else. Now, if you want an extra income, on the other hand, if you're new to it or you're intermediate and seeking more consistency, then find a way to get educated in order to have the process to make money consistently. Because if not, if you're going to do it by yourself and you're going to keep on doing the way how you're doing things and you're going to keep on adding more money into your trading account, you're going to keep on losing it. And I've seen it and been there, done that, right? So don't do like what the other people do, basically. Do you want to trade part-time or full-time? You can do both. Sometimes people want to leave work in order to trade full-time. How can you leave your work and trade full-time if you don't have the experience or the knowledge nor the trading skill? First, prove to yourself that you can be consistent making money on a monthly basis, and then slowly increasing your profitability on a monthly basis. And then once you can prove to yourself that you can make the same amount of what you're making in your income in terms of your job, then that's when you leave. Other than that, I believe it's a bad mistake to leave work to trade full-time where you have no knowledge or experience. Don't do that. Sometimes, people who are already retired, they have more time, then that's great, that's fine. However, if you're retired, don't use your retirement money to put in terms of a capital that you're trading where you have no experience or you have lack of consistency. That's why for myself, even before I will let a student really open up a big amount, if they're not consistent to make money in a $500 account, then what's the whole point of opening a $50,000 account if you don't even prove to yourself that you can make money consistently in a $500 account? And this is why I use Forex as a vehicle for learning, because of its advantage. So if you're trading stocks, by SEC rules here in the US, the minimum is $25,000 just to cover the margin requirements. Yes, outside of the US, like yourself, I know he left because he couldn't get in apparently, John. So for that aspect, like people who live outside of the US, they can use CFDs as a vehicle for trading because it's highly leveraged. 2, how will you learn it? So if you're seeking consistency, you need to learn properly. My opinion, before even putting your next trade in, it's going to be a losing trade. Find a way in order for you to do this properly, in order for you to make money consistently. I made it a little bit more bigger. Here's a really good book by Money called Master the Game. Actually, author is Arthur Robbins, and he interviewed billionaires across the globe on what they really do and how they really got there. One thing that resonated with me is by this guy, Ray Dalio. Yeah, so their hedge fund management, 15 billion. Sorry, not 150 billion. So $15 billion in their asset management. He started basically, his first job was a caddy, and then he started trading through tips while he was caddying. Got his, I believe, his PhD in business and finance, Harvard University, and now now he has basically some of the biggest hedge funds basically there is. What he basically stated here is simply, what they got to know, Tony, is you can win, says Ray, but you can't do it by trying to beat the system. You don't want to try. I have 1,500 employees and 40 years of experience, and it's a tough game for me. This is poker with the best poker players on earth. So just imagine if you're one of them trading and you're competing against millions and almost probably 1 billion of traders across the globe, and you don't have the experience or the knowledge, and you're using a system that is not probably even good, or you're using your own perception based on the system that's actually telling you, the chances that you're going to lose is highly probable. Wall Street Journal actually wrote an article that retail trader success rate is 55%. That's like playing heads or tails. So if you're a part of that, then it's important for you to change the way how you're doing things. And that's the only way that you're going to change the result is through that, is by changing something. I wanted to improve my trading results, and I knew that I buy at retail price point, and I knew that there should be a better way of trading. And yeah, I paid a lot of money, but it was worth it on my end. Now, through what I learned and what I basically also back tested, experimented on my end, people who wants to sign up, and they have to basically sign an NDA. It is, I share my methodologies that has a very high probability. Actually, I can create 100% probability of winning. And the methodologies have an 80% success rate based on the win-to-lose ratio, depending on the time frame. So on the other hand, those are my bread and butter. So why will I share my trading methods, something that I worked hard for, the time that I spent, then in return, I need to also to see some form of trade. I give you my knowledge. In return, you have to pay me too. And at the same time, when something is free, people don't really appreciate it anyway. So, but nevertheless, like I said, trading is challenging. At the same time, it gets easier. It gets actually, if you really think about it, trading is actually very easy, because if you put the probability, like I said, and you create the probability, making money in the marketplace is actually has no limitations. The only limitation it has is the amount of capital you have and your mindset with a good methodology. Okay, so in my opinion, trading is 100% mindset. A system is just a system. The system is part of the mindset. Also, it all depends also what you heard about trading that created, and part of your experience that created basically a belief system, either a limiting belief or supporting belief. In most cases, a lot of limiting beliefs, especially when a trader already experienced losing money and also lost a lot of money, that will play a big effect in their next trade because of that fear of losing. Nobody wants to lose. Everybody wants to win. On the other hand, it is imperative that losing is part of the game, especially when trading, because of the uncertainty of events. So trading for me is like sports, where to be an athlete and to be good at something, it is a skill. Trading is a skill, whether we like it or not. It takes time to master the skill. And research shows, if you go through and Google some books like Cambridge University published a book about peak performance, and they have found that it takes 10,000 hours to master a skill. And mind you, 10,000 of purposeful practice, not practicing for the sake of practicing. So if you started trading, you did it based on your own, and you created a bad habit, and you're doing the same thing repetitively, and you've clocked in thousands of hours, then you might have experience to trade or to create a habit or to create a technique incorrectly based on a repetitive movement. Sorry, repetitive practice. So just like put in PowerPoint. Okay, so in terms of 10,000 hours, it is important to do it correctly. It takes knowledge and experience to be consistent. You cannot compete on a world-class level if you're actually a novice. In other words, just imagine you're putting a 25,000 minimum already in a trading account where you're a novice and you don't have the skill set. The chances you will basically lose that 25 grand is highly probable. That's why in terms of myself, that when I'm teaching others, I use Forex and I said, do you have 500 bucks? Yes. Do you have an hour a day? Yes. Then if you have an hour a day, you have 500 bucks and you are very disciplined and consistent and you keep practicing, then you will make it. I've never had a student that lost their 500 bucks. And hence, because if they did, then they're doing the process incorrectly and I'm passing, go to the next level. So to be in a league, you will need to prove to yourself that you can be consistent at club level, then state level, national level, then world class level. You'll need to practice every day to clock 10,000 hours to master a skill. You'll need a coach and perhaps more than one coach to be in that arena. The coach will correct your technique. The coach will motivate you and push your limits to go to the next level. Since trading is a lonely profession, sometimes we have our ups and downs and sometimes more downs than ups. You're probably stepping like you're moving forward 5 steps, then you fall back 10 steps. So my job is to basically be there and just to see, okay, where are you at? What's happening? You'll need a good support system. Hence, within our arena is simply, it's a team environment, it's camaraderie amongst others. Having basically in a group setting plays a big difference compared to an individual setting. You'll need trading partners. To have a good trading partner should be where they also know the same methodology, and you cannot succeed on your own. As far as a tip is that don't make the same mistake that the majority of people do who wants to trade, especially learning how to trade, is by doing it by themselves. In trading, you cannot succeed on your own. Like sports, you cannot succeed on your own. In business, the same thing. You cannot succeed on your own. Google, Apple, Facebook, they weren't there for just being there by doing it themselves. No, they needed a good support system, hiring the best people in order to have the best company, right? And that's why they're competing against each other. Who's who? Because and if you really think about it, they just hire the top people that has the common goal. Our common goal is to make money consistently. That's it, plain and simple. We have no dramas within the group setting. Everybody wants one goal: to make money, how to be a better trader. That's it. If someone's being negative, I kick him out. Why? Because I don't want to have an environment where someone's negative. So if they're negative, then hey, do that on your own. Put that aside, put your ego aside, and then if you're ready, come back in. That's basically it. Because if someone's very negative, it's like cancer. It will spread, and I don't want that. And so I actually only kicked one person since I've been doing as a group setting for 2 years. I've been doing mainly more one-on-ones for the past 10 years. Actually, no, sorry, this is my 3rd year based doing this program. So here's why. If you trade on your own, you only see 100 degrees that's in front of you, you lose more consistently. There's no coaching, no mentoring, you're second guessing, you're just basically gambling. When you're second guessing, and that's why people will do analysis paralysis, because they're unsure. They don't know what they don't know. They are uncertain. And then they will ask me, what do you think of this? What do you think of that? Do you think it's going to go up? Do you think it's going to go down? So when you're asking, that means that you're not confident in your own analysis. When you have lack of confidence, find a way to be more confident. And that means that you have a lack of information using a technique or using your system. You create bad habits, instant gratification to make money, no trading partner. However, you trade in a team environment, you see you achieve the 360 degrees that's basically all over, the 180 degrees that's missing. Even more consistently, you have numerous coaches, you have 100% objectivity, you create excellent habits, techniques are being corrected. And also you'll be more defined as a professional gambler because you're no longer, so what I'm looking for, assuming, there you go, that it could either go up or go down. Okay, here's what I think I say an example of correcting a technique. When I've seen basically in the past, let me use something that has no, just use $C for now. Bam, there we go, nice and clean. When I learned how to trade, there are different techniques of drawing trend lines. They basically told me just go through and see the more lines you do it, the better, and it will create basically the trend. And then all of a sudden, people will draw different ways. At one point, I did a workshop, and then there was like, I don't know, the class was actually full, 22 students, because it was a free event. And then I took 10 people and said, show me how to draw your trend lines. Everybody's different the way how they drew the trend lines. Someone, all of a sudden it becomes all funky. Everybody's doing have this, everybody's doing that, everybody's doing this. And then you're like, wow. For me, that's pure subjectivity. There's no technique. And then when I learned how to trade properly, a good trading technique is simply where, if you're very objective, is this. Chart. Oops. I'm going to use an angle tool. Is clean. Likewise for drawing support and resistance. All of a sudden people will just be drawing and putting lines wherever they wanted, wherever they please. Bad technique. And when I started to learn more from professionals and dictating, they're telling me, okay, which was the most important part of price points. And then out of nowhere, the result is phenomenal. Why? Because of certain price points, the institutions are already doing or looking at the same and they're drawing the same way, then some of the lows will hit almost exactly to where the trend line is without second guessing, basically. And then I saw the power of that. So there's a proper way of learning how to draw trend lines, defining your areas of demand and supply. Also, there's a proper definition and looking at charts. And the old way for me looking at it, and they said, okay, well, I have a double top, I have a double bottom. And then someone asked me, what does it mean? I can't explain it. And then they told me, and said, then why are you using it if it is something that you don't explain, that you can't explain? Everything has got to do with the buyer and seller. So if you can't explain why price is dropping based on a buyer and a seller, or based on supply and demand, or based on how price action really operates, then you have a lack of knowledge. So for me, those are the most important part in terms of my education, is because I am a retail trader who is an observer looking for facts, and at the same time, to look at a two-dimensional chart is very challenging. I don't know if you've heard, there's a documentary called The Pit or Floored. Watch it. I've met some of those traders, floor traders, where they tell me up front, basically, what's this BS online trading bullshit? So you can't make money with that. But unfortunately, they need to adapt to it because everything went through electronic trading, part of your algorithm component, through high frequency trading. So if things are going through electronically, these guys, they need to adapt to the new system and they need to look at a chart. But these guys who used to make $500,000 in one day to $1 million in one day are now looking at charts that they can't even fully understand. Why? Like I said, because they don't see charts. They see people. They see emotions. And these guys are, like I said, they're like a pack of wolves. They're hungry. You're slow, they will eat you alive. In trading, you have 60 minutes of thinking. When you're basically thinking within that 60 minutes, a result can change massively. That's why retail trading is totally way different compared to institutional trading, to be honest. That's why I don't day trade anymore. I don't scalp anymore because of that aspect. And when you have a lack of information, no go. I love to trade before the news. Why? Because we look at certain aspects, leading indicators that will give me the edge. But if I'm just looking at a two-dimensional chart, I don't have much of an edge. I need to look at the whole bigger picture to create the edge. And hence, I'm more of a trend follower. As a trend follower, I have a higher success rate in actually winning rather than just looking at a very small portion part of this, meaning that if you're doing it as a day trader and you're looking at 5-minute time frame, 1-minute time frame, and you don't know the overall picture of where the trend is, you will lose. Right? Once again, because of the emotion aspect and our own perception. Okay, so moving forward basically from there. Any questions? Okay, alrighty. Moving forward from there. Results between team environment compared to individuals actually very different. If you do your homework, if you do your job looking for results, there's quite a few out there articles that have been written, also research have been made that within 3 years of actually trading live, either 50% all the way to 100% of their accounts have actually been lost if you basically do it on your own, compared to in a team environment where you'll have more of the success because everybody's doing it the same way, and you have the camaraderie, and like I said, people help each other. And in team environment, you're more likely to win. It has been proven. There's a few of my clients. Actually, this guy Mike has never lost a single week. Really good work ethic. My students actually vary from graduates. Some of them are actually still studying at university, and they're actually thinking already ahead of their future, all the way to people who are retired, who just basically left work or they get retrenched. On average, it varies from 5% all the way to 30% on a monthly basis, the way how they make money. Lisa actually moved to China. She works for a hedge fund manager. Mike, I referred to a trading firm in Chicago. Sisters, Caitlin makes an average about 10% a month. She makes an average between 5 to 10% a month. Jason is going back to school and trades part-time and makes an average about $1,000 basically a week. So for them, they make more money than a normal Joe Blow around the block, basically. Now I have a student basically in Australia. He's been in the program now for 6 to 9 months. For the past 3 months, on average, he makes 15% basically on average. But these guys, they put the time and effort though, so there's no easy way out. I have another person who now lives in Sweden, makes 30% basically a month on average. Like I said, they put a lot of time and effort. I have one lady from Vicky from Malaysia, graduated, an average makes between 20 to 25% a month, mother of 2, has also her own business, and trades basically part-time. That's what they do. But these are part of the results. On the other hand, is they put time and effort in order to make it work. I know for a fact I have a new bunch of members, and I have no doubt these guys are going to be killing it. One beginner through basically lack of consistency, just last month made 25%. And I know for a fact people are also up and coming who never traded before. I actually find it's easier for me to teach someone who's never traded before. Why? Because they don't have any form of bad habits. And also part of the psychological component. Younger people also, of course, have smaller layers compared to older adults because they have thicker layers in terms of, like an onion to me, is like in terms of their belief system. So, but there's the things that we work on, and the result will take longer. I have one member, a bit older, however, now makes an average about 10% basically a month. So it's just maintaining that consistency. I used to be a project manager in the IT industry, and now basically his job is to maintain that 10%. His goal is to make 15% to 20% basically a month. So these are the things that I do once a year. I bring him to the trading floor. I bring him to Chicago because at least he has still the S&P pit and the VIX pit. And also to basically let them know too what high frequency trading is all about. People who are into Autobots, in my opinion, you can't make money with those because of a lag in time. There's also not just the data itself. Now, if you can maintain and you have $100,000 basically minimum to maintain it on a monthly basis, and then you have a server that's close to the exchange, yes, definitely they do work. But if you're only doing it, you have cable and the lag time, you have 1 second as a lag time, too slow. But they have a different way, like their algorithms itself. These guys spend millions of dollars a year to maintain their system, and they push through more than $100,000 based in 1 microsecond. Their server is less than a kilometer away from the exchange. So that's why, it's a business. I've seen, a lot of trading firms out there that make on average a minimum of 300% basically a year. Even in 2008, when the market basically dropped, good firms, they didn't lose money. They made a lot of money. Okay, so to know the trading game is so important. Who you're dealing with. Great example right here. You're trading a horse or you're gambling. Basically, if you're a professional gambler, you will find statistics of what the horses are, who the horses, or what they do. Are they better through wet or dry? The jockeys, the trainers, to find the statistics. Basketball, same thing. And here's what's happening. If I analyze just basically in terms of trading, retail traders want to be part of the basketball game. Now, how can you beat Stephen Curry? How can you beat LeBron James if you want to be part of a basketball game where you're an amateur? You can't. They will eat you alive left, right, and center. Where you want to be is you want to be sitting on the sidelines, observing who the players are, their statistics, the coaches, their wins to lose ratio. Then you can have a better edge on where you're going to place your bet. That's why I love trading Forex, is because euro against the US dollar. This is like the blue team versus the white team. Blue team is euro, US dollar is white. Now, I would be able to find the statistics based on whether euro will be stronger or the dollar will be stronger. Which one to switch? I'll find those facts, the statistics, the data. Then I create the probability. Then I will place my bet based on the high probability of where the price is going to be. So easy. Trading is actually very easy when you think about it. So over here, on the other hand, if you are using your own perception, I think it's going to drop. That's perception. Looking at it, it has a double top. That's perception. It looks like it's going to go down. It's perception. So to be really a good trader is you need to look at the market the way it is. Because of this, what are the statistics? What are the data basically it's giving me? What is the macro fundamentals giving me? What is the dollar index giving me? You need to look at the overall picture in terms of connectivity between the marketplace. This is what it looks like on the trading floor. Do they see charts? Hell no. They don't see charts. They're seeing who's buying, who's selling, how much they're buying, how much they're selling. So in other words, already supply and demand in there. This is where you don't want to be. Learning how to trade in terms of a system, knowing in terms of patterns, and all of a sudden you don't know what's going behind the scenes. That's why if you're going to place a bet, you need to place a bet on where these guys are basically putting their money. If they're buying, you have to buy with them. If they're selling, you need to sell with them. You can't use your own perception just because the chart is telling you to go up, but what if they're manipulating it? You're done. What if you don't know how to really read a chart? You're done. What if you don't have a good risk management? You're finished. What if you don't have a good profit maximizing strategy? You're finished. What if you don't have a good money management? You're finished. What if your psychological behavior is not in sync with your system that you're using? You're finished. It wouldn't work. You need to know exactly why you're trading, the system that you're using, with a good psychological edge, in a good peak performance state. Then you will have an edge to make money with these guys. Never beat them. You will lose. In other words, never be part of the game. You will lose. When you're being part of the game and you don't know the game, you will lose. Be outside of the game, know the game, find the statistics, find the data, find the probability, then you will have an edge to win more consistently than losing. That I guarantee. It's a big G word, but this is the way it is. So there's a big difference between institutional trading versus retail trading. Institutional trading is simply you're trading for a big corporation or a big firm that have a lot of money, a lot of resource. They're the ones who push the price in order to go up or down. They're the big guys. They're the ones who have the ability to manipulate it. Insider information always happens, whether you like it or not. When there's insider information for these guys, they would rather pay the fine. They won't fight the SEC. They won't go to court. They will just pay a big fine in order to gain billions of dollars. Retail traders are the ones who trade for their own money, or individual investors who just buy into securities for their own personal account. That's basically it. Now, it's imperative to be an observer. It's a type of retail trader who observes the movement of institutions, that if they're going along, you go along with them. If they're selling, you have to sell with them. If they're staying away, you have to stay away. So if they're going within the trend, you be with the trend. Never go against the trend. You will lose. Okay, so do not become a retail trader. You will lose 90% of the time. Be an observer and always know the players of the game. That's a very important tip. Also, it is imperative that you need to know that you are a risk taker. If you're not willing to take a risk, please stay away from trading. One of the students actually before the Chicago Mercantile Exchange, and one of the floor traders, Pete. Pete's experience for 30 years basically as a trader floor. He's probably in his mid-60s, but loves his job, close to his 70s. One of the students basically asked, if there's one thing that you can give us advice when it comes to trading, what would it be? He said, in this business, you need to learn how to take a risk. A calculated risk. You take full responsibility of that risk. If you know that you're wrong, close the position. And very simple. It's a very simple advice. And he said, don't lose money. That's it. In other words, you can have a 40-60 win to lose ratio. 40 big wins, 60% of losing small losing trades. You will make money consistently on a monthly basis. Similar to competitive sports, there are no guarantees that you will win. It's only based on your confidence level. Unfortunately, people will measure their own level of confidence based on the end result that they basically have. Guess what? It's your own fault. If you have a lack of confidence because you're measuring your own results because you have more losing than winning, then guess what? I'm going to tell you up front. Do something about it. Then learn how to trade properly, get educated properly, get the piece of information that you're seeking to gain the level of confidence. At the end of the day, confidence is confidence. We all have the level of confidence. It's just a matter of how we perceive confidence from the inner world to the outer world. Okay, so to be part of the trading game, you'll have to take a risk each and every time you're going to trade. Consistent profitable traders are risk takers. They know their risk, they take full responsibility of their risk and accepts the risk. So also at the same time, you also need to see whether you really have what it takes to be a profitable trader. Meaning that if this is what you really want, then you have to go for it. Do something about it. Like I said, if you're willing to change your end result, it has to come from you, not from me, not from the other person next to you, not your partners, not your friends. It has come from the inside, from the heart, out of your desire. Okay, so that being said, now according to research in business, there's a 10-3-1 formula that if there's 10 potential customers that will go to a shop, 3 will be interested, only 1 will buy. Now, in success, in terms of success, when it comes to trading too, if there's going to be 10 people in the room, 3 will be interested in learning, but however, out of those 3, 1 will be consistent. This is part of generality in terms of learning. In my own opinion, I've never had a client where 3 people will be interested, or say I have 3 new students. Those 3 students will be consistent no matter what. It's also a matter, of course, on the end result. One will be faster than others. The results will also vary based on the 6 inches between your ears. Okay, work ethic. To be a consistent profitable trader, you will need to know who you are as a trader, your purpose and why you are trading. You will need to be meticulous. You will need to be disciplined. You need to have a high level of integrity. You will need hours of practice to do this. You need passion and love for the game of trading. Okay, so that's a good tip. We spoke about trading as a business or hobby, your part-time or full-time. To do that also based on your occupation, the money that you have, your knowledge, your trading skills, trading experience. Please don't be like other people where you make money as an excuse. Oh, I don't have the money to start to learn. Dude, that's a lot of BS. A lot of people basically will lose already a minimum of 25 G's, 30, 50,000, but they're not willing to put in terms of their own education. Don't do that. First, it is important to invest in terms of your education to minimize a bigger loss in the future. That's a better way of doing it. Okay, so if you have money to put in 25K, but you don't have the money to put into your education, for me, I don't accept those type of members because I already know for a fact they make this based on this excuse. So to really be consistent is simply knowing also what you really want. Is this really what you want? Go for it. There's no limitations. Your knowledge, your trading skills, your trading basic experience, family status too. Some are single, some are married with no kids, some are married with kids. To be honest, it all depends on their desire. If single, they definitely have no excuse to learn. Married with no kids, no excuse to learn. Married with kids, most cases, some of them are so hungry that they will do anything to actually do it. So I have a couple of students based in Australia. They wake up at 3, 4 o'clock in the morning to be in my class. They have the option of doing it at nighttime, but they come in the morning one because they want to hear me speak. Okay. So that being said, moving forward from there, in summary, once you know your intention, you put all your focus, determination, your passion, commitment, and motivation to take massive action to get educated properly. 2 is about preparation. Planning and preparation before trading is important. So the question now is, how can you prepare before battle in terms of your preparation? What will you need to do in order for you to prepare? It is imperative to prepare mentally. It is imperative to prepare technically. It is important to prepare physically. To prepare mentally is all knowing your inner game, your belief systems, your value systems. What are your million beliefs that will sabotage your trading success? You'll need to know your values that will support your trading business, or especially your success itself. You need to know your emotional needs. It's also very imperative to profile your own self, whether if you are really a day trader, a momentum trader, or a swing trader, a position trader, a trend follower. These are what we call based on 3 different aspects of conscientiousness, whether you're the type of person who is very responsible, who neuroticism, where you can control your own emotions, and lastly is all about your risk, whether you are a type of person who can take a lot of risks, or risk averse, or risk tolerant. Okay. Also, it's imperative to know whether if you're addicted by nature or not, or you can trade to make money. For example, that's why for us it's important to have a trading psychology before they even learn the system. Actually, it goes hand in hand. It's simply a psychological course that has 12 different modules to find from your identifying your beliefs all the way to your habits. To prepare technically, you need to learn the foundation of trading, meaning about price action, the 3rd dimensional technical analysis, because like I said, on the 2-dimensional chart, it is challenging to just look at a 2-dimensional chart, but you need to know the 3rd dimension of a buyer and between a buyer and a seller. How to determine the speed of price? That when there's a lot of momentum, how can you calculate that momentum, and is there a probability that the momentum will continue? Okay. Also, it is imperative to determine when to enter, where to enter, and to have the highest probability of winning with the lowest risk. Your target points, the probability in terms of where the distance, knowing the distance in terms of where you entered all the way to the exit point, your stop loss point to determine your risk, your money management in terms of position sizing based on the probability, determining in terms of your exit strategy, offensively and defensively. So for us, in terms of the beginner, in terms of white belt, there's 4 elements: learning price, learning the macro fundamentals, the connectivity of the whole global economy that will add in terms of your probability or why you should enter, to go long or to go short, the energy flow of price in terms of direction or where the price is at. So if the price is dropping and you're going against it, your probability that you're going to win is very, very small compared to your risk. And there you have a high risk. Why? Because you're going against the flow of price. It's important that if it's dropping, you have to be with it. But the question is, where can you enter when price is dropping? So you can't sell the level of demand and you have a low and you have a very small stop loss, you will get stopped out. So wait until it reaches a level supply, then sell, and then you're with the flow. Then you have a high probability with a low risk. You need to know about supply and demand. How is really price? When you're reading price, is it approaching demand? Is it approaching supply? Is it approaching equilibrium? What is the probability that it will continue? What is the probability that it will resist? So the foundation of technical analysis is important. Unfortunately, and this is also me in the past, I didn't learn about this stuff. I learned the system, I learned an indicator, green light, blue, or red light system, patterns, and then all of a sudden I had 5 different indicators and it goes through a certain way, then I bought. No. It was, when I think about it, geez, it's definitely the wrong way of actually dealing with it. So to prepare spiritually, on the other hand, it is important how to control your emotions, especially the during phase. We have the before phase, the during phase. Markets or price will fluctuate. It will go up, it will go down. Hence, your account will go up, it will go down. Your profit and loss statement will go up, it will go down. When you're up, all of a sudden you're happy, and then you will leave it. What if it goes down? All of a sudden, you are in a negative state of fear, irritation, worry. And then you get impulsive, anxiety kicks in, you close your account or your position or your trade, you now disobeyed your own rules, you disobey the training plan, the next day you went to the roof. Now you have an emotion of regret, you're kicking yourself. If only I did this, did that. The reason why that happens is because you don't have full control of your own emotions, meaning the emotions controlled you. When a person is angry, there's no way that the person can think straight. That's why in most cases, when someone is in an anger state, as a martial arts instructor, in terms of self-defense, when someone's angry, the number one rule is you calm them down. We don't use our skill of fighting. We only use the skill of fighting to defend ourselves, that if we are being provoked, or the person not calming down, then we use some form of force to calm that person down in terms of self-defense. In most cases, in terms of jiu-jitsu, stand-up, we use it, in terms to control that person and without hurting them. We only hurt them and they become very violent. That's the last resort. So for us as a martial artist, we've learned how to control our own emotions, how to be patient, how to be actually abundant in trading. So patience, timing is basically everything. How to be focused, how to be motivated, how to be intuitive. And to do that is actually through visualization and meditation, also through coaching. That's why in terms of the intermediate and advanced, they have a trading psychology 202, where I give them a lot of different visualization and meditation techniques that they can utilize on a day-by-day basis. And the purpose of that is to build the focus, concentration, motivation, intuition with trading. And it's an important element. It's a part of a daily routine is that meditation should be part of it. Before you even trade, a slight exercise is an imperative component. Going to the gym, going for a walk, doing yoga, stretching, breathing exercises, because when you're out there and you are breathing, you're exercising, it creates a blood flow and oxygen level towards the brain. It will leave you more into focusedness. And if you're meditating too, it clears everything in terms of emotional stress. And then you will be able to trade in a free and clear mind. When you have a free and clear mind, guess what? Then you can be able to be aware from top to bottom. That's how you can be in the zone. in terms of balance and health and nutrition is also important. It is imperative that you also eat right. It is important that you are hydrated. No athlete would be able to focus. Now, if you're working for a corporation, if you're not well rested, guess what? Would you be able to perform and will be able to do the job of what you're supposed to be doing? No. If you're not performing your job, they will kick you out. You'll get the sack. Now, this is a business. If you want a good profit or you want to be a consistent, profitable trader, then you also have to do it right. I have one student, actually, I asked him, basically said, okay, do you get paid when you go to work? I said, yes. Then why don't you pay yourself first as well when you're trading? Now, to be a trader, a professional trader, you have to do it from top to bottom. You have to follow your own rules, like the way how you need to follow the rules of the employer's rules. You don't be at a certain job at a certain time, you get warning, and you get basically axed. Then when you're trading, you also need to be at a certain time and at a certain place, that when you are analyzing that you need to trade, then you have to trade. If it's trading, it's trading. Business is business. So to prepare physically, you need to eat healthy, hydrated, well-rested, and exercise on a daily basis. According to Alan Williams, a PhD student at the same time also a trader at the Chicago Mercantile Exchange, from the book The Intuitive Trader by Robert Capel, stated that the best traders condition themselves psychologically and physically for success. And these are floor traders that she basically surveyed and interviewed at Chicago Mercantile Exchange from the early 2000s to the late 2000s. They have running programs, they go to the gym, they meditate, they're careful about what they eat, in short, they take excellent care of themselves. I know for a fact, I have a friend who trades in the trading floor. Actually, he retired 25 years in the trading floor at the CME. I think about in the CBOE because he's an options trader. Midweek, he goes to the club and basically dances. That's his form of meditation, just to clear his mind and just to release stress. So you need to find a way in order for you to release your own stress. Okay. Development of trading methodology. You need to learn 100% objective trading methodology that can identify objective entries, exits, risk management, money management, and profit maximizing strategies. By the way, picking tops and bottoms are possible. Why? Because the market leaves clues. Once you know these clues, for me, it's like your crystal ball. You have the edge, you have basically the piece of information ahead of everybody. And when you have that, in terms of probability, this is how you can make money more consistently. So for example, two methodologies of ours, they are 100% objective. They go in hierarchy. Every methodology, every trading indicator will have a hierarchy. Okay? Trading systems and methods, by the way, are not created equal, and they have their own purpose, and hence is why we never mix and match methodologies, and we never mix and match indicators. The goal is to be a consistent profit trader in all hierarchies of trading. Step 3, if you really want to be consistent, is you need to practice. There's no easy way out. If you want to practice and you're not comfortable, yes, do it on your demo. But at the end of the day, you need to apply that methodology in a real environment. And a good way, that's why I use Forex as a vehicle for learning, is because of that aspect. A student has to put in a live trade, no matter what. And for me, it's got nothing new about the end result. It's more of the process. So in the intermediate, if they want to be passed as part of the curriculum, part of the syllabus, is that they need to do 100 live trades. 100 live trades will include filling out 100 trading checklists that they have to do, 100 feedbacks that they have to give out in terms of their other members. Because feedback, when you're giving feedback, that actually you learn a lot from it. So the more mistakes they do, the even better. And that means that when they can learn from the mistake, then they would be able to go to the next level when it comes to their own trading based on that mistake, and they have to apply that. That's why practice is an important element. So that's why we have live trading classes every day, is to practice the technique in a live trading environment. They need to execute in a live trading environment. So like say today, in about 5 minutes time, actually, we're going to have a live trading class. So live trading is imperative to test the theories and techniques in a real-time environment. So step number 4 is competing. At the end of the day, you're competing against other traders out there. However, there's different levels of competition. Club level, showing consistency in a micro account. So when you're practicing and you're trading in a micro environment, can you maintain consistent that you can win consistently? You get your consistency, then you can go to a national level, increasing your account to a mini account. And go to world-class level, go to standard account. So at the end of the day, percentage is percentage. It has got nothing to do in terms of the amount of zeros. Yes, the difference amount of zeros. If you can maintain consistency making 10% here, then it is easy for you to make 10% in a normal standard account. Why? Because you already mastered the process. Okay. It is important to do that because you need to prove to yourself that you can do it from a small account before you can go to a bigger account. Tip, don't make it personal if you lose. This means you need to improve or adjust your trading technique, get coaching, your coach will assist you in that area. Know the tips of the trading methods, keep on working your trading psychology, adjust your trading style if need be. Lastly is the repeating the process. That's step number 5. So if the process that you have created works and if it's making you money consistently, then refrain from tampering it. If it's not broken, then fix it. And this is how we maintain consistency, and I maintain consistency with my own trading is because of these 5 simple steps. So I need to know my intent each and every time I'm trading. I need to know my own behavior in terms of measuring my own emotions before trading. Then I have simple steps in my own methodology. I keep practicing, and then I repeat the same process. Okay, and also, of course, the planning and preparation basically from there. Visualize the same process of success over and over again. Be meticulous, be disciplined, be humble, and be aware of euphoria. So in summary, as you can see, there's a tremendous amount of work involved in becoming a successful, consistent, profitable trader, despite very simple steps. For most people, on the other hand, this will represent too much hard work. If you're one of these many people, I highly recommend not to trade. For those who are willing to put in the effort, and it presents a clearly defined path towards success. So in summary, you're always looking and searching for highly motivated, positive traders who are seeking the same goal, is consistency. So if you would like to be part of our team, just email me through estraders.com, at gmail.com. And for that, we are offering basically a free education base for 30 days. So we pay for your education for 30 days. That's worth $680. It's a soft scholarship program. It's a 2-month program. And then if you like it, then you just pay the $680 basically for the 2nd month. And you can continue from there on. So the purpose of that is to see the process of our Be to Have training program, the 3 phases of our program, and then the basics of how students learn and trade to become a consistent, profitable trader. And there's no obligation ask. You like it, great. You don't like it, that's okay. Okay, so if you're interested, email me with that, and we can hook you up. Any questions, queries, challenges as part of the Q&A? If you don't have any questions, thank you very much for coming along and hearing to what I have to say. Thank you, Bala. Good to see you again. Thank you, Bjorn, Eric, Joe, Keith, and Ken. I wish you good luck in your trading, and see you guys pretty soon, somewhere, sometime in the ether. Have fun.